Today, I want to talk through the AMC Squeeze timeline and explain the two possible squeeze scenarios. We've got the short-term squeeze, or the mother of all short squeezes, triggered by one of many black swan events. And we've got the long-term squeeze, or the short squeeze, where AMC continues hitting new all-time highs for years to come. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, Brandon tweeted saying one of two things is for sure now that bankruptcy is off the table. Either one, we get a rolling squeeze lasting decades for those shorts to deliver, or some black swan event will happen where the unrealized losses won't matter because they're too huge and these funds go bankrupt. So I want to explain why this will happen to AMC, but I first want to show some proof of this happening. So AMC Ape tweeted this screenshot comparing Overstock to AMC and pointing out the massive similarities between both stock charts. As you can see, Overstock had this initial run from $20 to $90 per share, very similar to June of 2021 for AMC. AMC ran from $14 to $72, $77, and Overstock ran from $20 to $90. But then over the next 2 years and 3 months, there was a 97% total drop in the share price of Overstock while it was being attacked by shorts. Overstock fell from $90 per share to an all-time low of $2.50. During that time, Patrick Byron, the CEO of Overstock, was complaining massively about illegal short selling. Many of those videos you can find on Twitter or on YouTube, and I've spoken about them many times. But since that all-time low at $2.50 back in March of 2020, Overstock ran to a new all-time high of $128 per share. Overstock had its initial run up to $90 per share and then was attacked by the shorts for 2+ years, until having another run up and setting a new all-time high. That period of attack lasted 2 years and 3 months, and the Overstock stock fell by 97%. AMC, on the other hand, has also been attacked for the last 2 years and 3 months and has experienced a 98.5% drop. As you can see with these two charts side by side, they are very, very similar. And I believe AMC will be hitting new all-time highs for years to come, as I'll explain now. I've previously touched on a number of stocks before, like Booking.com, whose stock price went from $7.32 to over $3,000 per share. There's also a number of other big stocks during the dot-com bubble era that cratered, but then exploded massively over the last 20 years, consistently hitting new all-time highs year after year after year. The thing that made these companies set consistent new all-time highs over the years is the fact they are good, successful companies. During the dot-com bubble era, many of these companies were loss-making, but since then they've improved their businesses, setting new record profits. Now, many of the shills point to AMC and say that AMC can't ever be a successful company and is guaranteed to go bankrupt because it has negative shareholder equity, basically meaning the total liabilities are bigger than AMC's total assets. They say the fact AMC is profit generative is pointless because AMC has too much debt, but I want to point out why that couldn't be further from the truth and why AMC will be a successful company. Because there's also a number of other companies that are very successful that also have tons of debt and negative shareholder equity. You can currently get a guaranteed free share of Tesla or of Google and up to 15 free shares on top of that, which you could always use to buy more shares of AMC or of GameStop. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying temporary deposit. Signing up to Moomoo is free and it's easy, it just requires that temporary deposit, and it's a really great way to help support my channel. But on top of that, Moomoo is also very easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. Taking McDonald's, for example, they have $50 billion in total assets, but $56 billion in total liabilities, meaning they have negative shareholder equity of $6 billion. McDonald's has $56 billion of debt, but continues to be successful because it is profit generative, generating around $10 billion per year. And if you look at the share price for McDonald's, it's gone from $3.81 to over $279. Now again, let's also look at Starbucks. $27 billion of assets, but $36 billion of liabilities and debt, leading to negative shareholder equity of $8.7 billion. Starbucks is successful because it's profit generative, generating around $4 to $5 billion in profits per year. And again, the price of Starbucks has gone from 42 cents per share to over $95 per share. Now another one, and this is probably one of my favorite examples, is Dominos Pizza. $1.6 billion in assets, but nearly $6 billion in debt, leading to negative shareholder equity that's even larger than AMC of over $4 billion. But again, Domino's Pizza is successful because it's profit generative, generating over $500 million per year. Now, all of those people that say AMC will go bankrupt because it has too much debt won't ever talk about Domino's Pizza, Starbucks, or McDonald's, because these are three massively successful companies that also have tons and tons of debt, but their share price continues hitting new all-time highs each and every year. As AMC continues setting record-breaking profits quarter after quarter after quarter, especially with a new Taylor Swift revenue and additional concert revenues in the future, AMC's share price and AMC stock chart will look like McDonald's. AMC stock price will hit new all-time highs year after year after year as it becomes even more successful. Booking.com, McDonald's, Starbucks, and Domino's Pizza are perfect examples of companies that do have high debt, but are successful companies setting record-breaking profits year after year after year. And as a result, their share prices also hit new highs year after year after year as well. This is a perfect example of that rolling squeeze lasting decades, where AMC's share price would hit new all-time highs year after year after year, well into the thousands. And it seems CNBC is also finally catching on that AMC isn't going anywhere. CNBC posted this article saying Taylor Swift could change the movie theatre industry with her Eras Tour concert film. Here's how. It says Taylor Swift changed the music industry and now she's coming for the movies. It says despite placing her previous documentaries and concert films on streaming services in the past, the iconic pop star opted to deliver her Eras Tour film directly to cinemagoers this October. And the filmed concert is already breaking records for movie theatres and is expected to top $100 million during its opening weekend. And it says the excitement which led movie theatres to design specialty popcorn buckets, creating boutique cocktails, and even setting up friendship bracelet making tables illustrates there's a hunger for making something bigger and more memorable out of a trip to the movies. And following the pandemic, consumers have gravitated more towards experiences out of the house. And because of this, communal experiences that can only be experienced outside the home are more important than ever to the theatrical industry. The Taylor Swift Eras Tour concert is expected to generate billions of dollars alone, and 43% of all of that money will remain with AMC. This alone could cause AMC to generate billions of dollars in profits, making it a company similar to McDonald's, Starbucks, and Domino's. Yes, it's a company with debt, but it's also a company generating billions of dollars in profits. Now that's an example of the long-term rolling squeeze play lasting decades where AMC continues setting new all-time highs. But let's also talk about that shorter time period or time frame short squeeze, or mother of all short squeezes, caused by a black swan event. I've covered black swan events many times in the past between market crashes, dividends, acquisitions, and many other forms. But Ed has pointed out how much of a great time now is for a potential AMC acquisition. Something I found very interesting is that AMC currently has a market capitalization of $1.2 billion. AMC also has 950 separate theatre locations directly from their website. And if you take that $1.2 billion market cap, divide by the 950 theatre locations, that's only around $1.2 million an acquiree would be paying per entire theatre. These theatres are set in multi-million-dollar locations, generating multi-millions of dollars, potentially generating billions of dollars as at the end of this year. And a potential acquirer like Amazon, Netflix, or Paramount, or a number of others, could buy these theatre locations for just $1.2 million per location. And as I've explained previously, an acquisition could be the perfect black swan event for the AMC mother of all short squeezes. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell. because that way you'll be alerted when I upload a new video. Cheers.